Well, I was gonna do a sound check. Can anybody hear me? If you can, please post it in the question box. All right. All right, good. We got a couple minutes, but all right, thanks, bye. All right, excellent. And you should be able to see my screen. And let's see if this is already, okay, yes, it is recording. All right, awesome. All right, so we're going to do basically an introduction to Fibonacci time analysis. So we'll give it like one more minute and then we'll get started. And you know, the last thing I tried to record didn't record, so I'm going to double record this and see if we can at least get one recording going. All right, so let's hit record the screen, do that, and then I'll also have, okay. Okay, so we'll get started in just a minute. Okay, good afternoon, everybody. I did do a sound check, so I trust that it's still working, and I'm recording it in two places, okay, since I've had some issues with getting some of these, you know, webinars are disappearing, you know, they're not recording correctly. So anyway, today's going to be a little bit about introduction to Fibonacci time analysis. A lot of people don't really understand what I'm doing with this, and I believe that, you know, this will help you to better understand what I'm trying to achieve, and let's go from there. So timing cycles, okay? So let's talk about the time cycles. We basically project time cycles for potential changes in trend using the same Fibonacci ratios that I use to do the price analysis, okay? So similar to the way that I project price relationships for a potential change in trend, I'm using or measuring the time between prior key highs and lows and then projecting forward in time, and then looking for a confluence, most often, of cycles to suggest a potential change in trend, okay? And we're actually in a time window now, so that'll be a good one to look at, but we also want to look at some of the recent examples, which I'll actually switch over to the presentation that I did at the Expo in New York. So as far as running the time cycles, what I like to do is measure the prior highs to highs and project forward in time, lows to lows, highs to lows, lows to highs from intervening lows, and lows to lows from intervening highs. And then also you can do like time symmetry, where you can compare swings in the same direction, the time of them. So for example, you know, a low to a high projected from another low to compare the swings in the same direction, or a high to low projected from another high in time to compare swings in the same direction. There's actually a really good example that I had recently. I think it was in W Day. Anyway, the ratios that I use, again, are going to be the same as what I use for, you know, the price analysis. I'm using 382, 50%, 618, 786, 1272, 1618. Occasionally, I will use a 236. I don't use 236 often with timing, and then I will use 2618. So there's a lot of swings on the chart to find these, you know, to find these clusters of timing. Let's take a look at, let's see what I have here. These are definitely some really old examples, but it doesn't matter because it still works the same way. And I'm also going to show you some recent cycles. But here's an example of, you know, measuring from prior highs to highs and all that kind of good stuff. This is way back when on the Dow Jones, okay? And what was interesting here was we had a high to high cycle, and that came in on the 13th, 786. I had a high to low projected from the high. This is time symmetry. We had a decline of 24 trading days, and I projected that from the second high to look for the next time for a possible low. So that came in on the 11th. Then I also had a low to low cycle. 100% came in on the 13th. And then I also had a low to high cycle. 618 came in on May 14th. So I basically had the dates between the 11th through the 14th for a possible low when the market was trading straight down. And also it was a beautiful two-step pattern. So it hit, it held. Not only did you have the timing factors, but you also had key price support. Now that's going to be most ideal when we have time and price come together. But this is the timing aspect that not everybody understands just yet. Now there's another way that I run timing before the cycles, and we will get into that also. That is with the histogram that I use with Dynamic Trader software, and that we will get into a little bit later. This example, super old, but let's just look at it anyway. So this was a really old, this was the S&P way back when. Okay, this was actually, believe it or not, in 02, and it works the same way, as you will see soon. So here, for example, I measured a high to high and found a 1618 on October 10th. I found, let's see, another high to high, 100%, October 11th. A low to high, 1618, October 10th. And another, looks like low to high swing, and this was 2618, which I would consider more of a confirming cycle, came in on the 10th. So we had the 10th, 11th, and what's happening? The market is going straight down into the cycles, so you anticipate a reversal back up, okay? I think that's what is really important to understand. If the market's going sideways into a cluster of cycles, it really, it doesn't help. But if the market is going straight down into a cluster of cycles, you're going to look for a low and a reversal back up. If you're going straight up into a grouping of cycles, you're going to look for a high and a reversal back down. Okay, let's see if I'll need to maybe go to the more recent examples. Yeah, again, this is kind of what it looks like. I'm just measuring prior highs to highs, lows to lows, and all that good stuff. And again, looking for the confluence. I think this example is really too old, so I'm gonna leave that one alone. There's also a concept of, time and price squaring. And I don't see it all the time, but for example, on this particular chart, this was a 15-minute chart in NASDAQ. This is where we measured a low to a high, and you had the retracement. The retracement at 786 came in at this 994 area. At the same time, we tested the 786 retracement in price. We had 786 of the same swing in time. So low to high, 786 in time, 786 in price. That's what I call, squaring up time and price. There's, I'm sure, other ways that other people look at it, but that's what I would look for as far as, squaring using, Fibonacci. Now, the other thing that you might see sometimes is you might see 50% in time and 618 in price. Okay, so those are not the exact same ratios, but when you do have those two come together, I'll still consider that a squaring of time and price. All right, let's see what else we have here. Yeah, so here where, you hit 786 in price and time, and boom, you met key upside targets off of that area. All right, let's see if we have anything else. Okay, let's go back to, I think I just skipped one here. As far as the timing tools, now I use them, I use Dynamic Trader software by my mentor, Robert Miner, but you can also run this in Thinkorswim. Thinkorswim has the tools where you can measure timing cycles with a two-pointed tool. That's where you're going to measure the highs to highs, the lows to lows, highs to lows, and lows to highs. And then you can use a three-pointed tool, low to high projected from another low to compare swings in the same direction, or a high to a low projected from another high, comparing swings in the same direction, a high to high projected from the intervening low, or a low to low projected from the intervening high. And we will go over all of these before we're done here. And what I'll do, well, I already actually put out the other presentation that I did and made those, the notes available. So that's where you'll have some actual examples that you can go back to. You can use Thinkorswim or whatever program might have those same tools, and you can try and replicate the work. Okay, so for me on the program that I use, here's the ratios that I use for 2 dates. Pretty much everything I use for price, 50%, 618, 786, 100%, 1272, 1618, 2618. Then we have the tool from 3 dates. And in this case, I only use 100%, 1618, and 1272. Probably should have, flipped those around, but it doesn't matter because they're both going to show up. So those are the ratios. Time histograms, I'm probably better off showing you one. And that's, the pink histograms that you see underneath the chart. This is kind of what it's going to look like. So what I have to do on any chart is I have to create a swing file that will show me all the swing highs and lows that I would want to use to run timing. And in this example, if I'm running timing from the last high, I want to look for the next possible low. And then, you'll look and see where the histogram might come in and notice that there was, a huge cluster of timing here. And it hit and it held and it resumed the rally. Okay, that's the type of thing we'll also be looking at, if I'm running timing off the last high for the next low and we are trading lower into that time window, you look for a reversal back up. And, vice versa. If we were going straight up, you'd look for a reversal back down. All right, let's just get rid of this one because this other one will work better. Let's do slideshow. No, actually I didn't want to do it from the beginning. Let me get back here. Because we already did our work on price. That is in the other videos that I've done. All right, here it is. So I want to start it right here from current slide. Okay, for some reason it doesn't want to do it for me, so I'm going to have to go like this. Okay, here we go. So as far as timing, again, this just reminds you that I'm using the same ratios that I apply to the price axis of the market, and I apply it to the time axis. For example, we'll measure time between a prior high to high swing and then multiply that time by the ratios and then project the results in the future. When we see time clusters, we look for a possible change in trend. Also, when time and price come together, you have a much higher probability trade setup, okay? Especially if it's in the direction of the trend. So that, again, that's just a reminder of, what we're using timing for, to look for reversals. But one of the things you have to remember about timing is that in the same way that all price support and all price resistance doesn't hold, there are a ton of time windows that the market will blow through. You only act on this if you see some, clear signals that tell you it's worth placing a bet against the time window. This is an example of the timing histogram that I use. Every once in a while, you might see a little chart that looks like this. This was when I ran the S&P cash from this last, I believe it was from the 19th of February. And notice here that you had a standout, or, right here, you can see the highest scoring bars relative to the other. And that came in 227 to 229. That was in the S&P. Now that can show up under the chart, but here it is right here. whoops. Sorry about this. I keep going backwards with these. All right, here we go. So here's where you see the S&P chart, the daily chart. You can see the cluster of cycles. These are the trading day projections. That gave us 226, 228 for a possible low. And then here's the histogram that you just saw on that other chart that says 227, 229 for a possible low. Okay, because I had projected from this last high for the next possible low. And yeah, it didn't end up becoming a major low, but did you see a reversal? Very clearly we did. Okay, so we had the histogram suggesting a possible low, and we had the outright cycles suggesting a possible low. And we did see a beautiful rally, right? That's the S&P cash. Let's go back to an example of what we're really doing, but the computer's doing it for us. Well, here's a daily chart of Lulu. So one of the cycles I would use is a prior high to high cycle. So between this high to this high was 37 trading days. You would multiply that, in this case, by 1.272. Actually, you would multiply it by all the ratios, but this is just the one that we're showing in this example. So 37 days times 1.272 is 47 days. That means you're basically projecting 47 days from this last high for the next, possible change in trend. And since we were trading straight up into the 20th, which was 47 trading days from this last high, exactly, that's when this market rolled over. So timing doesn't always work, but it works often enough that, if you do start seeing signals, you have that extra information behind you as far as, what to, or to look for a reversal of whatever the market was doing into the time window. All right. So I showed you one cycle there. This is something that you can now go do by yourself if you learn how to use the Thinkorswim tools, as far as the cycles. And I'm not 100% sure if I did a video on that timing just yet, though. So here, we had that, one cycle here, high to high, 1272 on the 20th. But guess what else you had? You had a low to high swing, 100% on the 21st. You had another high to high swing, 100% on the 20th. You had another low to low swing, 618 on the 21st, and you had another low to low swing, 1272 on the 21st. So you have 1, 2, 3, 4, 5 cycles. As we were moving straight up in Lulu, we had these 5 cycles. What does that tell you to do? Number 1, ratchet up stops just in case the market turns. Number 2, if you're okay with counter trend shorts, you can look at it, against this timing. But you at least want to trail up stops on any, positions at that time, on the buy side. Let's see. So that's actually a good one to recreate because it wasn't so far away, but Lulu, you definitely had beautiful time window there. Okay, there was an original setup that I did in GDX. And, when I see timing, great. Sometimes, I don't see timing or a cluster, or might see, just miscellaneous cycles. But if I have 3 or 4 cycles, I want to pay attention. So here we had a high to high, came in on January 14th, 1272 extension. We had a low to low cycle, 1272, January 13th. I had another low to low cycle, 1272 on January 13th. And I had looks like it was a low to low, 786, January 14th. So I had January 13th, 14th. The market pulled back directly into key support, price support, into the time window, time and price, okay? So our initial rally was okay, though it didn't meet the target. We ended up retesting the original trade setup, and then it did re-trigger on the buy side, and we did ultimately, make some targets on the upside. But that's timing. And again, you can go back to that. You can see if you can recreate these cycles because it wasn't that long ago. Okay, I forgot to get my water here, but This next chart is Tesla. It's a daily chart. And this is where I had 4 cycles on February 4th. I had high to high cycle, 1272, Feb 4th, high to high cycle, 100% Feb 4th, and low to low cycle, 100% Feb 4th. So I had 3 cycles on Feb 4, and what were we doing? Spiking up into this timing, okay? And it did, it reversed from there. We had a very healthy reversal from this timing. So if you're trading anything, you want to know what might get in the way of a move, and timing will be a part of that. This next example, well, I had talked about this in, let's see, I've talked about this in some of the prior presentations, or actually, you know, this has been, if anybody's in the FMA service, you know that I was talking about the fact that we had 6 time cycles the week or the month of February. I had one here on the 14th, the week ending the 14th, another the week ending the 14th, one the week ending the 28th, one the week ending 21st, 14th, and 28th. Okay, so 1, 2, 3, 4, 5, 6 cycles. Now, since the market was, you know, out of control straight up, we wanted to anticipate that in the month of February that we might get a reversal. But if you're looking at, you know, a weekly chart and you're saying it's plus or minus, then you're talking about the week before February 14th and the week after February 28th would have been the time window. And that's not helpful by itself. It was just helpful in saying February is important because we have a nice cluster of cycles. However, we were able to fine tune it by using the daily work. And in the daily work here, let's say I had an alternate time projection, low to high. From the low came in on the 18th. It looks like I had a high to high, 1272 on the 20th. I had another high to high, 1618 on the 21st. I had another low to low, 786 on the 21st, and another low to low, 618 on the 20th. So 18th through the 21st, we were trading straight up into it. Actual high was made on February 19th. And then one of the things that I like to watch is the 513 EMA crossover. And, you know, once you cross to the downside, that was when we knew we were more vulnerable to the downside. And then, of course, we took out the 50, and now we've, you know, taken out the 200 and all that. So this market doesn't look good at the moment, but when it shifts, you know, then, you know, it'll feel safe again. Right now, we're not in a good place. All right, let's take a look at time symmetry. And actually, since I did this last presentation in New York, things have changed. So here's an example of where you can compare 2 swings in the same direction. This low to high on a weekly chart of W day was 18 weeks long. This low to high, 18 weeks long. And not only did you have the time symmetry, so 18 and 18, we had price symmetry. So we had one rally swing, which was 51.32. We had one rally swing which was just short of that at 50.94. So it was both time and price resistance. And if you looked at W day recently, it made this target to the downside. All right, let's see what else I have in here. Okay, now there's also intraday timing. So this is when, again, I basically make a swing file of the key highs and lows that I would like to use for the timing work. Now, in this case, this is a 30-minute chart of Amazon. And my projection would have been from this last high to the next possible low. And at the same time that the histogram showed us that we had a cluster of timing cycles, we also had price support. So it hit, it held, it triggered, and let's see, how much of a rally was this? So there was a rally of about $47 from a 30-minute time decision, okay? And these don't always work, but when it matches up with price and then also triggers, you definitely want to look at it, okay? I haven't had a whole lot of time to do too much in the way of intraday timing, but I did do the S&P and NASDAQ today, and actually the S&P was exactly or the bounce that started was exactly off of that last low. All right, let's take a look at, let's see what else. So this might be just the trigger example. Okay, so this is where you hit that support and timing. This is a 1-minute chart in Amazon. So again, if you want to have relatively low risk on these setups, you have to, well, for day trade decision, you have to use something like a 1-minute chart, or something that's going to trigger you in relatively close to where your initial risk is. Okay, and in this case, okay, after making the low into support and timing, you had the moving average crossover, and you also had taken out a prior swing high. Once both of those things occurred, then Amazon was a buy, and your initial stop would have been underneath this, this last low, or underneath the low end of the zone, either way. But you did get the crossover, and a beautiful rally followed. So what I'm going to do now, I think what I'll do is just open up my charts. So let me do that, and then we'll take a look at some of the current charts, and then you guys can ask questions. Okay, so I've got, well, actually, let's take this off. All right, so let's look at the indexes and ETFs. Okay, so question is, do I create my own swing files or use the defaults? I create my own swing files. I look at it, I see how it looks, and you know, I see what I want to use, and you know, you typically have to adjust it. Another question is, why did I use the 1272? I use all of the ratios, all of the time. The only problem is that's what, okay, hang on a second. Yeah, that was just an example, so I just showed the one, you know, the one ratio there. But anytime I'm running timing, I'm going to use all of the ratios. I was just showing an example where that one, you know, just ended up clustering with a group of other cycles there. And someone says, I mentioned the high to high. Can I provide the prices? You should have the labels on those charts that I did. And typically it gives you, let's see, you know, here, I can't see it very good right here, but you know, this is going to tell you the price, how long it took, you know, so the date, the price, the change, and all that good stuff. So that is built into the program. Question, if you're using a 4-hour chart, how far out? Well, I typically use 500 bars when I'm on Dynamic Trader. And as long as that's, you know, I mean, that's typically enough to find, you know, some key highs and lows to run timing off of. But one of the things that, let's see. Well, I mean, let's look at this right here. S&P cash daily. We have another time window with the histogram. Okay, and I believe it's from this last high. And that shows us March 17th, 19th. We are going straight down into timing. Okay, the histogram says 17th, 19th for a possible low, and then the outright cycles, we had 3 on the 17th. Okay, and we're within 1 day of that. So are we in the time window to anticipate a possible low? Yes. Does that mean it's a major low? No. Obviously, it has to pass all the other tests. That's the stuff that I talk about in the end of day videos. Okay, if anyone's watching my work, but you're not watching the end of day videos, you're missing a lot, because that's where I explain, you know, what I'm doing and, you know, why I'm doing it. Question is, do I ever do timing on Thinkorswim? I do, but I hate it, because as far as I'm concerned, it doesn't grab the exact highs and lows all the time. It's very difficult to see, but it can be done. So, you know, if you try to put like 4 or 5 cycles, you might have, let's see. Yeah, if we did 4 or 5 cycles there, hang on just 1 second. I have to do something real quick. Let's get rid of this. Oh. All right, so anyways, we've got, yeah, the 3 cycles here. And again, if the market's trading straight down into the time window, yes, you look for a reversal. If the market's going sideways into it, forget it. It has no predicted value. Let me see where else. Okay, we also had recently gold. Now, the only problem is I deleted the other gold chart that had the timing on it, so sorry about that. But we basically had the 13th through the 16th. Did we make a low? And we did. And we saw a rather dramatic reversal, but whether or not we're going to continue to rally from this time and price low, because we had about 4 cycles. I posted this a couple days ago, 4 cycles between the 13th through 16th. Low was put in here. Did you have a rally? Yes. From there to, what was it, here? I mean, that was a $103 rally. So don't you think you want to be prepared in advance for when timing would suggest a low? Okay, so I have another question. Okay, when I do highs to lows or lows to highs, well, you know, I would think that time symmetry would be very valuable. And also, for example, if you're measuring like a major low to high, I would say the retracement in time of a major low to high would be very important also. Now, someone's asking how many bars do you allow for a turn, plus or minus 1 bar? Yeah, I do plus or minus 1 bar of the cycles. So if you have, you know, the cycles that are saying like the 17th, then it's the 16th through the 18th. You know, that's when I look for it. All right, are there any other questions? Because actually we have some really good examples. I'm going to open up my other workspace where I'm doing the stock work, and I'll show you some of those decisions. All right, let's just get the stocks up. Yeah, and one of the things that I noticed about Thinkorswim is that all right, so let's look at some of these, like right now. And again, I have no idea if the market's going to turn with this timing, but there are standout decisions. So for example, in the case of Tesla, which has been, you know, straight ass down, you know, from here, we had, let's see, 1 cycle, well, 1 on the 20th, 1 on the 18th, 1 on the 19th, another 1 on the 20th, and 1 on the 17th. So actually the 17th were a little bit, well, actually that would still be considered valid. Let me just edit this because we really need to include that. So 17th through the 20th. And I do have those cycles, you know, I believe from this last high as far as here, this is where it shows up with 19th through the 20th. If it says low, 19th, 20th, that means I'm anticipating a possible low and reversal back up. Okay, when I put the histogram on the chart. Otherwise, the outright cycles that you have are right here. You know, here's, you know, these are the trading day cycles. So I watch both of those, but the trading day versus the calendar days tend to be different from each other by maybe a day or two. All right, and then let's see what else did I have. Well, I had the 16th, 17th, and then the 20th shows up for Apple. That's not a huge cluster. I mean, there's 3 price relationships, but that's about all I had to work with here. And Amazon. Amazon has rallied $231 from this last low. And what was there? Timing histogram. It said DTP low 316.18. That's from, this last high. So we had that timing, and then we also had some of the outright cycles that said 16th, 16th, 19th, 18th. Okay, so 16th through the 19th. And let me double check this because I do not know if I have it labeled correctly, where the exact low is made. Yeah, Monday, the 16th, 16, 16, 18, 19. So we were trading straight down into support in Amazon. It was a counter trend trade, but the cycles told us to anticipate a possible low. If you took a signal against this area, your initial stop would have been just right underneath here. And this is a great time to use, options or option spreads, though I know that the options lately have been insane as far as prices, but typically we'll trade options. But that's where you had timing and you also had price. This is how you're supposed to use it. BABA, let's see, how many cycles? So in BABA, I had used the histogram, and I did it off of 2 highs for the next low. So high here and a high here. And I projected downwards in time. And the first time window came in the 16th, 17th. Today's low is made on the 18th, so that's considered to be within the window because it's plus 1 day. But the other grouping was 320 to 322. So if we, start seeing lower prices again, then this is the next time window we'd look at, March 20th through the 22nd for a possible low. But bottom line, we hit an extension and we had timing for a possible low. Now my other lines disappeared, but bottom line, that's just what you want to watch for. I mean, if it fits, if it goes along with support and resistance, that's when it works the best. Facebook, let's see where I had the outright cycles. 17, okay. Yeah, so I didn't have much as far as the outright cycles. I had the 17th and the 17th. So plus 1 day is today. So we're in a time window. Now, are we going to continue to rally? That's another story. I mean, I actually started running the new resistance, and if we don't clear that new resistance, you cannot expect it to continue to move up. But that's something that I'll have to do tomorrow. All right, then Google. So what's up with Google? Well, you don't need this one here. We had only the 16th, 17th as far as cycles. Oh, wait, here's another one underneath here. Nope, that doesn't come in for a bit. So I had only 2 outright cycles, but here I very clearly off of the last high had the potential for the next low of the 18th, 20th. And yeah, we closed nicely. Does that mean that it's going to continue to rally tomorrow? No, not necessarily. There's going to be a lot of resistance on the way up. But yes, we're in a time window, and you anticipate the possible reversal if you're in that time window. Let's see, what else did I have? No. Okay, yep, and Netflix. March 16th, 17th. Netflix was going straight down. It was just short of a 1618 extension. That's really the only price that I really had there. And here's the dates. Here's you have the 17th, 16th, 17th. Then you had a couple dates on the 20th. But hey, we've put in a low. 1 bar after that, 16th, 17th, 18th, is within the time window to anticipate the low. And we did see a nice little bounce in Netflix. Let's see if I have anything else. Actually, I have timing. Yeah, I did already show you the timing in Tesla. But you have it both with the histogram. This is a nice standout. And then you also have you know, the outright cycles. Yeah, I don't know. We've changed to the June contract, so we can try it in gold. We'll see if I can find anything. Now we already know we had timing at that low, and you know what? If you're running this now, it's not in one direction, and the timing won't have, you know, won't be valid. It won't matter unless we have a clear move, you know, up or down into it. So that's one of the things you have to remember. So here, okay, that's 20th. We haven't reached that yet. We would also run, let's see, high to high here. You know, I get rid of all the ones that we've already gone beyond because it's not helpful. Oh, there's another one on the 20th. Now there would also be, just if it's a very small swing in time, then I only use just a few of the basic ratios, like, you know, 100%, 618. Just want to see if there's anything there. So 100%, it looks like overlaps, because otherwise, if you have a timing every other bar, that's worthless. Okay, that's the 23rd. All right, so then you can look at a low to low cycle. Well, there might be a couple. There's a low to low. That's not helpful. Let's try this low to low. '23rd again. But like I said, it's not going to have any value unless we're going straight up or down into it. And right now we're in between a move. This is where you made the last low into timing. You're not going straight up from there. So, you know, let's see what the market's doing when we get into that window. And let's see, there's probably more to run. So one of the things I can run is this low to low over here. Okay, that's where that 16th came in. So there's nothing beyond where we made that first low until the 31st of March. So I'm going to get rid of all these other cycles. Let's try a high to high from an intervening low. That would use 3 points, high to high from the intervening low. And then we only use 1272. And okay, that doesn't come in until April, so that's not helpful. You can do, I'm not sure if this might be too small to run that. I have another date on the 23rd. And let's see, you can also run timing of low to a high, but yeah, we haven't really gone anywhere fast. Maybe the smaller swing, low to high. Yeah, that's only a 236. I would leave that alone. So that's not really helpful. And then the only other thing you could look at is maybe the time of some of these prior moves. But I'm not sure we're going to find anything similar at this point. So from the last, let me label this last high, March 9th, that low, that was 5 days down. So yeah, if I was able to find some of these swings that were 5 days down, then I could run those projections, but it doesn't look like it's gonna, yeah, that's not gonna work there. Maybe here, that was 7 bars. And that was 4 bars. What was this high to this low? Yeah, that's 4 bars. So that's pretty much it. You know, in some cases, you know, you can run highs to lows or lows to highs. In other cases, you don't. You just, you know, run as many cycles that make sense. Ooh, actually, we need this high to high too. Let's look at this high to this high. Next shows up the 19th. So if we were getting a move directly into the 19th through the 23rd, then I would look for a reversal, but we're sideways right now. And that low would be considered pivotal because of the last timing that I did. If you're interested in the dynamic trader software, first of all, I have some free training on my YouTube video. There's 2 about hour-long sessions of how to set up the program. And yeah, you can get it, dynamictraders.com. But if you tell Bob it's from me, then I'll work with you for an hour getting it set up. But the good news is that if you already set up what you can from my free video, then you would have you would get to use that hour, on Zoom to go over anything else that you'd be interested in, rather than setting it up. I see another swing here I want to do. And that this may be the old support. No, that was the 13th. But yeah, that's something to watch, Are there any? Yeah, there is. Actually, let me just. I can probably find you that link. Let's see, that will be. This is a landing page, so let's see where I have it. Okay, and then we have, no, that's not what I did. Okay, so then there's Dynamic Trader software. I'll give you the link to that. Here we go. Oh, I'm going to send this to everybody. Okay, so are there any questions on anything that I've just gone over? No, my book does not have the setup instructions, but my video does. So let's see if we went back to YouTube, and then we go to my channel. You're going to see on the, looks like it'll be on the second page, Dynamic Trader Tools.
New time cycle ratios.
Oops, that's too loud. Okay, so this would be the first one that will teach you. And then the second one, let's go back to the other one. And then here's DT session number 2, which goes over, and let's see if this will just, okay, here we go. So it's 2 hours worth of learning, if you are interested in it. Now, as far as the colors, guess what? I did a video on that also. So, if you're going to go to my YouTube channel, so this is it. I've got the most recent presentation that I did in New York. I had a very basic short-term video on what to look for with time cycles, but it's only 2 minutes long. Here's the color codes. If you want to know what I, why I use the different colors. I mean, I basically want to know what's inside of a cluster, but that tells you what they are. I did a whole one on symmetry. I did the toss projection tool for price, toss the retracement tool, day trading plan, with triggers. Here are the do dynamic trader sessions right here. Another one on triggers, both for swing trades and for day trades. And then this was an older introduction to fib time and price. The one that I did, last week, though, is definitely more recent. And this might just be an old example of a trigger video. Oh yeah, I think the only other video that you might find would be me shooting an Uzi. I don't know where that went. Yeah, that's about it. Do I use the daily chart and work down to the weekly? Well, or you know what? I mostly use the daily charts. Occasionally, I'll have time. If I see a really good price decision on an intraday chart and I have time, then I'll run the timing on an intraday basis. I mean, I did that this morning with S&P on the 120-minute chart. Okay, so as the market was trading down, this looked slightly different before, but here's where you're going. I ran timing from the last high for the next possible low, and we were within a bar. of that. And then let's see what the NASDAQ looks like. NASDAQ was a little bit short of it, but the S&P was a better hit. Now, sometimes I will also look at the weekly charts, and that's just, you know, if I have time or if I can't find something on the daily. Now, you know what? I had a long day, so I don't really want to run any other new ones, but I'll see if I had timing on here. You know, and again, this is what I go over in the videos every single day. Yeah, I had timing. March 16th, 17th, 18th, 19th. Straight ass down into support, into timing. Anticipate a possible reversal. Yes, we got a reversal, but we just don't know if it's going to continue or not because we're in a downtrend now. So yes, can you look at this for, you know, counter trend buy decision and then see, you know, what it gives you? Yeah, if you're okay with counter trend trades. But there's time and price in NVIDIA. All my work is, I mean, I'm mostly doing price work for my intraday stuff. So for example, you know, we had Apple, but I'm not messing with timing on these during the day, not unless it's a special setup. This was the last setup here, this 257, 259 area, and you had a decline into an extension. So that was a day trading decision that that high to that low, $20.49. Okay, so you know, if you get something in the middle, you should be a happy camper. Amazon, okay, that I didn't really have too much in Amazon except just this, you know, these two pullback decisions, because Amazon is one of the ones that has also triggered on a 30-minute chart. And that's because we had the moving average crossover and you also took out a prior swing high in the process. So at this point, I'm going to look for an extension to the upside via the 30-minute chart. And BABA, so I had a sell zone in BABA that was coming in at 189.83 to 191.89. You know, it held the zone. It wasn't a perfect hit, but it hit and it held and it triggered on the short side. And you met target number one. So that was a decline of $19.39. So again, you know, day trade, sure. Absolutely. And then let's see, Facebook on the, so Facebook had a sell decision. And now, you know, I'm setting up the next one. And I'm just going to keep setting up the sell side until it doesn't work anymore. When it stops working, that's the first indication that we might have a more important low in place. But, you know, we're setting up the sell side again in Facebook. Google, you know, both sides, well, you know, the daily chart has time and price for a low, but then you have to take it from one decision to the next. That's from support and timing. And then these are the areas I'm going to watch for possible failure. But if we push through it, then the rally can continue for sure. And then let's see, Netflix, I had time and price. But how about the 30-minute chart? Yeah, so the stuff that you want to day trade with is going to be, you know, the probably the 30-minute stuff. But you can also use the daily zones for day trades. So for example, let's say when we, no, not that one, but I'll say, okay, so let's say you knew that there was some support down here in Google, and now I need to open up my Thinkorswim here. I don't really care about the gaps. I do want to show you an example of how that you would have gotten triggered in for a day trade. You just wouldn't be taking it overnight because, as you know, if you've been taking stuff overnight, I mean, you can get absolutely screwed in this market. So let's see, let me just open up the Thinkorswim and I'll grab a 1-minute chart and I'll give you an idea. Okay, so for example, when we got down to 1037, this is what the 1-minute chart looked like. Was there a buy trigger? Hell yes. For a day trade? Yep. There's the low, here's the crossover, took out a prior swing high in the process. Nice rally. Okay, and then if you use the trailing stop, you would have been stopped out pretty much, unless you kept your stop underneath there, you probably would have been in it for the second swing up. But that's how you can use it for day trades. You just use the very short-term trigger charts. And are there any other last questions? But the most important thing to remember is that, we look at timing if the market's going straight up or straight down to then anticipate a possible reversal back the other way. So there's nothing to be, too, let's see. Yeah, I mean, it's relatively simple. We're looking at the timing for reversals, but only if we're going straight up or straight down into it. I provide the daily video on both. I do one on this grouping of stocks. That's the stock waves segment. I do Apple, Amazon, Baba, Facebook, Google, Netflix, Nvidia, Tesla. Now I also do extra stocks, and I do once a week, I do a stock picking session. But when I have something extra, I'll just show that during the day. I don't waste my time taking an hour to do a video. So the videos are typically about 10 minutes long. And then the other video is going to be for S&P, NASDAQ, S&P futures, NASDAQ futures, TLT, gold futures, and crude oil. And that's the other video that I would do. And that's also, 8 to 10 minutes, something like that. Ha ha. I think somebody else might say that they know where the bottom is, but I'm going to take it from one decision to the next. I mean, were there buy signals against, where we made those extension targets? Let's see, I'd have to look. Well, that would have been, a 1 minute chart absolutely triggered on the buy side. No, actually the 15-minute chart did also in the S&P. And then the 30-minute chart, 30-minute chart is trying, but the 15-minute, which is the aggressive swing trade trigger, did fire off. No, I only do the stocks and stock waves, and I do the other one is called FMA, financial market analysis. And both of those are on the site. If you just go under my name, and you'll see what I do there. I think you can do a trial. I think 14 days or something like that. Let's see if I got all the questions. You can do triggers in DT, but all you have to do is, like, say here. So let's look at a 5-minute chart, and we'll do in the S&P. Oh God, I hate these gaps. They're insane. Chart, low template, and then I just use the template that has the 834 EMA, and I just look at it visually. But Thinkorswim will give you a crossover signals also for the 834 EMA. But let's see here, you didn't have the moving average crossover until over here. Wow, nice rally. Yeah, so here would be the crossover, and then you also want to make sure, did we take out a prior swing high when that occurs? And obviously it will be faster if you do a 1-minute chart. But all you have to do is run the chart and add the 834 EMA combo. You can also run the indicator like this. If you want to see it a little bit more, better, I just make it like that so it's a little bit easier to see. No, I don't do GDX every time in FMA. That's the only ones that, I will do that sometimes, but the only ones that I've really, contracted to do is S&P, NASDAQ, TLT, gold, and crude. But every once in a while I do GDX, and I do the stock picking session for both services, and I just do that once a week. I actually had anyone else who wanted to come yesterday. I just put it out in the main room too. All right, and if you have any other questions, obviously you can private message me on the site, and or respond to anything that I post in the services. And definitely, though, you want to put, if we get time and price together, those are some of the best setups, for sure. So I think I'm going to wrap it up here because honestly, this has been one of the longest couple of weeks that I've ever experienced in my life, especially having to go to New York for the expo, which was a little bit scary. All right. Well, I hope you enjoyed it. I hope it makes some sense. This has been recorded 2 ways, so I will at least get 1 copy of this, set, and we'll go from there. But actually, let me just give you one. Let me show you one example of a trigger in gold. So here, on the 30-minute chart, you had a bearish pattern. Okay, I think this might have been the only setup I had today in this one. But 1507 to 11 was the resistance. And let's see what that looks like. So if you do, I need a 1-minute chart. 1507. Where is that? Okay, so let's say, for example, so we knew that that was resistance. Notice that you couldn't get through it on 3 tests of it. Looks like first signal, you had the crossover, but you didn't take out the prior swing low until a little bit later. And then there was another crossover here to the downside. But bottom line, that was a setup. It did trigger entries. I don't know if it's going to make the full target, but we always shoot for it. So we held the resistance at 1507 to 11 area. And let's see what we did from there so far. Typical targets, the 1272, 1467. But so far, you've had a decline of $29.70. So anyway, I'm going to stop it here, and I'll see you guys around. Like I said, if you have any questions, then feel free to send me one. If you don't have access to the site, I'll just give you my email. But I will not respond until I, get all my work done. All right, thanks for joining me, and I'll see you soon. Okay, good afternoon, everybody. I did do a sound check, so I trust that it's still working. Let's save and edit, so you don't have to hear this again. All right, so I'm gonna shut it here, and I will see you soon.